Welcome everyone to another episode of How to Make Money in Stocks with Investors Business Daily. We want to let you know that the latest issue of the free IBD Extra newsletter just came out, and in there we talk about how you can tell if Apple stock is really bouncing back, and we have a list of some of the fastest growing companies in the stock market.
And on today's show, we're going to talk about the Big Cap 20 and how this list really can help you with your investing, especially in a choppy market. We'll also take a look at the Oracle of Omaha, and believe it or not, some of Buffett's stocks are showing up on our IBD screens. I'm out to Orlando this week, so first, Matt's going to take a look at the market.
The market posted another up week as Friday's jobs report for last month showed a gain of 242,000 jobs, which trumped forecasts and marked the best labor force gain since 2000. Although the indexes got off to a rather quiet start Friday following that report, both the NASDAQ and the S&P posted their third straight up week, with each week closing near the top of the range. And note how volume has picked up over the last couple of weeks. That's good to see, and hopefully it means fund managers and other large investors will continue to pump in more money. One of the top breakouts for the week came from Smith & Wesson. After the close Thursday, the gun maker blew past estimates for both earnings and sales, with gains of 195% and 61% respectively. And on Friday, the stock shot past a 26.64 buy point as its relative strength line moved into new high ground. Volume for the day was 416% above average. As of Friday's close, Smith & Wesson was still trading within a 26.64 to 27.97 buy zone. Another big move on an earnings beat came from Broadcom, formerly known as Avago Technologies, before the two chip designers merged recently. The stock gapped up to clear a 138.69 buy point in this double bottom pattern. Volume was 43% above average. If you go through the IBD 50 this weekend, you'll see a number of stocks that are either setting up in bases or, like Ellie Mae, have broken out recently and are still hovering within a buy zone. We'd all love, of course, to catch a breakout and see it just zoom higher right away, but it doesn't always work that way, especially in the kind of market that we've seen recently. So for stocks like Ellie Mae, stay patient and give them time to run. And of course, follow the 7 to 8% sell rule if the stock should suddenly head south. Vantiv, which is a leading payment processing company, is another IBD 50 stock that has been flirting with a breakout recently. And from the same industry, we have fellow IBD 50 member PayPal. It's working on its first base since going public last July. It was up over 4% this week on volume 40% above average. And while it may look like a double bottom, it's not a proper one because the low in the second leg down did not undercut the low in the first leg down. And that makes the buy point 42.65, 10 cents above the peak on the left. That's just a quick look at some IBD 50 stocks that may be getting ready to move, so be sure to check out the full list this weekend. And also, if you're fairly new to charts, stop by our website and you can download a buying checklist and a base checklist that highlights what to look for before you buy. And you'll find that at investors.com/investingshow.
The Big Cap 20 is one of our top lists in IBD, and it comes out every Tuesday. It's a computerized list of more liquid names. Now today, we're going to focus on some of the names that are the top performers in the recent market, as well as some names that are newer to the list.
Now, to make the IBD Big Cap 20, a stock has to have a market cap of at least $15 billion. And since in recent months we've had more of a defensive tone to the market, some fund managers have been moving money into these larger, generally speaking, less volatile stocks.
This list really can help you maintain your watch list. Now, currently, there are some good performers, which we'll talk about in the next segment. There's also names setting up. We have O'Reilly Automotive, NVIDIA, Paychex, and Intuitive Surgical. And Matt did a stock analysis video on Intuitive Surgical this week.
And since the end of 2014, the maker of the Da Vinci robotic surgery system has hit resistance around that 560 to 580 range. and it's now setting up in a flat base, so we're going to see if it can clear that 580.10 buy point in heavy volume. And going back to a topic we discussed 2 weeks ago on the show, look how the 10-week line got back above the 40-week moving average in December. So that shows renewed technical strength in Intuitive Surgical.
Now, two names that have done well from the Big Cap 20 are Tyson Foods, which is up about 20% since it broke out of a base-on-base pattern February the 5th. The chicken producer has been putting more energy into high-margin products, such as Jimmy Dean sausage and antibiotic and gluten-free chicken. Now, Campbell's Soup is up about 11% from the breakout. Campbell's is expanding in the fresh and natural category. They're adding fresh carrots to a new line of organic soups. It's also made a series of acquisitions in the fresh and natural categories. Now, I've covered both of these in the Stock Market Today videos, and you can access all of our videos at investors.com and click on IBD videos.
Now, the latest IBD Big Cap 20 has two newcomers from the airlines industry, United and Southwest. Both have suffered sell-off since around the end of last year, but an uptick in earnings growth last quarter has them showing signs of a potential recovery. United Airlines earnings were up 112% in the most recent report. And Southwest saw earnings rise 53%. It got back above the 10-week moving average last week on good volume, but pulled back this week and has still got a lot of work to do in the right side of that current base.
So make sure you check out the Big Cap 20 each week. This usually has some really strong performers on it. And underneath the mini chart, the description can really help you find some stocks that are potentially setting up.
How would you like an edge that helps you pick winning stocks faster? An edge that is proven to outperform the S&P 500 by 76% since inception, and that you can take advantage of today without spending a dime. More on that in a minute. Each day, our top market team at Investors Business Daily scans our proprietary stock lists and screens to find superior stocks with the most potential for big gains. They analyze these stocks every step of the way to show you basis, buy points, sell signals, and the right time to take profits. It's about as close to hold your hand investing as you can get. Introducing Leaderboard by Investors Business Daily. For a limited time, you can try all of the premium features Leaderboard has to offer for a full 14 days at absolutely no cost to you. You'll receive unlimited access to all of the time-saving research, powerful investing tools, the leaders list, cut list, and expert analysis you need to develop a winning investing strategy. And it's all 100% free for your first 14 days.
There are many differences, of course, between IBD's approach to growth stocks and how Warren Buffett invests. But
just a few.
Just a few. But since his conglomerate Berkshire Hathaway just reported last week, we thought we'd take a look at some of his major holdings.
Now, the Oracle of Omaha owns some names that show up on our IBD screens.
Yep.
So we talked about the Big Cap 20 earlier, and some Buffett names that are on it on this list include AT&T and Verizon. And as we know, Warren Buffett does like dividend stocks. He does. And both of these have really wonderful yields. AT&T has a 5.1% yield, and Verizon has a 4.3% yield.
And here you can see some of the major holdings of Berkshire Hathaway. These are in addition to Buffett's ownership of Geico, the BNSF Railroad, Precision Castparts, and others. Now, the list here clearly shows how Buffett has a preference for blue chip, well-established household names.
Yes, he does. And he's often quoted as saying that he is more comfortable buying stocks on a major pullback than as a stock is rising. So the methodology is quite different than Can Slim investing. But in a wobbly market, some of these so-called safe haven stocks and these companies have really been a solid choice for investors. The
least well-known stock on the list we just saw is Phillips 66. It's an oil and gas refiner that Buffett has been buying heavily recently, sometimes buying millions of shares a day. And that has some folks speculating that he's going to acquire the company outright.
Now, Berkshire Hathaway owns about 15% of Phillips 66, which is currently basing. And the position is up from about 10.5% at the end of last year. He now owns about 15%. So Buffett has increased his position. This is not a recommendation, by the way, because some of the Oracle's positions are down. Now, one stock that lost money last year was Wells Fargo.
Of course, Buffett is generally much more of a long-term investor in companies than a trader of stocks. So he operates on a longer time horizon than a more active growth stock investor. Now, AT&T, which is another of Buffett's holdings, is somewhat more aligned with some of the CAN-SLIM traits that we look for. And I covered AT&T in the IBD stock analysis on February 9th, just as it was breaking out of this cup-shaped base.
Now, this is also a leaderboard stock, and it has shown up on various IBD screens. So AT&T is up nicely from the breakout, and again, considering that the dividend is 5.1%, it has been a solid performer in a choppy market.
So that's a quick look at where Warren Buffett has been placing his bets, and we'll have links to more articles about Berkshire Hathaway and its holdings on our website.
And in this market, we've learned to be nimble and flexible. That's something we always have to do as investors, and see what stocks are offering us opportunities at the particular time. So come and join me. I will be out. I'll actually be here for a few weeks.
Right.
There's a couple weeks where I'm in
nice
town.
Change of pace.
Yeah, really. Right. Get some rest. But I will be out in mid-April. I'll be in Kansas City and Chicago. So do come and see me. I love seeing you guys on the road, by the way. I love it.
Absolutely. And you can get all the details on that on our website at investors.com/investing show. And while you're there, check out the IBD Extra newsletter and the links to the different articles we have on Warren Buffett.
Okay. See you next week, everybody.